Hi everyone. Today let's talk about Fundrise. Fundrise has made a few changes since the last time I did a Fundrise overview, so we'll go over some of the changes to the platform. Then we'll go over my current holdings in this portfolio. Then we'll go over the Q1 2022 update and see how they did against the rest of the market and what they see going forward. Then I'll go over my Q1 results. And then I'm actually going to do a little bit of jelly on this video just because I think it's time to give my comments on this interaction. And I really think Andre Antunes did the best version. If you like investing in real estate and making money, definitely like and subscribe. I make videos like this as well as individual stock reviews every single week. So make sure you hit the bell so you don't miss out on any future content. Welcome to the Portfolio Bulletin. Let's get started. Starting with the changes to the platform, you can see that they are introducing a new interval fund, merging 6 of their income-based REITs into a single interval fund. This is going to be similar to their Fundrise E-Fund, which is not based on income, but it's going to concentrate their money and allow them to be a little bit more efficient with fees as well as production. They also launched the Fundrise Calculator, which is basically the same as any investment calculator. They put the starting point generally around where you're at, and then they expand that out based on your monthly investment to any age that you would like, and then you can see how that would change based on if you were able to invest more money at the time. And of course, they allow you to update your auto invest, and then they show you how they do the math. Median year around 9%, and they say this could vary left to right from 7 to 12%, and some years it could be even higher. It's also a good demonstration of how investments are exponential. The more money you have, certainly the faster that it grows. And even on my little chart here, you can see how that's accelerating. I've been putting in the same amount of money every single month for quite a while now. Of course, there's been a few big chunks. Usually this is investing in Fundrise stock, but basically the same stair step going indefinitely, and it's certainly accelerated here recently. As I've mentioned in previous videos, they also launched a podcast, which now has 2 episodes. They seem to do these quarterly, and it helps give you a better understanding of what the company is thinking on a short-term basis. And this one was mostly focused on inflation and the current environment with the Fed and rates going up. Of course, they still talk about the new properties that continue to get added to your portfolio as you add money, and then you can do IRAs with them if you would like to do that. Moving over here to my portfolio, you can see the flagship fund is my largest holding here at 20%. You have the Fundrise E-Fund, which is the one that they merged a couple of years ago. Then you have all the different E-REITs across the country, and then the Income Fund, which they just merged, as I mentioned. I expect this holding to grow quite a bit. I know I'm on the long-term growth fund, so I probably won't have a ton of money in the income fund here in the short term, but usually when they combine funds and make a larger fund, they do add money to that one. And I am on an auto invest, so we'll see how that plays out. And then you can see the Fundrise IPO. This is shares in Fundrise that I've invested in. Put a little over $10,000, and I did invest in their most recent round of funding. And you can see they do a note here based on what they think the shares are worth. I bought the shares for just over $10,000 for 1,100 shares, and by their estimates, they're worth about $15 now, which would put the value somewhere around $16,000. And then you can go through all the different projects. If you're curious what's in each of these funds, you can do that. So you can look at the actual value of the individual fund, unpaid dividends, unpaid advisory fees. You can look at your dividends year to date, so paid dividends versus unpaid, appreciation this year, and then advisory fees, and then the different projects that are included in that fund that are active. Then you can look at the different projects that are included in that fund. They say this one is ramping up and currently has 50 active projects. And then you have the different categories here. So you have value added, fixed income, and then the core plus plan. I'm not sure exactly what core plus means versus value added, but opportunistic is generally they see something that is too good to pass up, and they'll take some of this money and try to invest there. Or fixed income, which is single-family rental homes for the most part. Or it could be apartment buildings that pay that regular income, or even bond investments to other construction companies where you get that solid, steady income every single month. Looking at my most recent investments, you can see here they did all the mergers into that income fund from the Income REIT 2 as well as E-REIT 14. Then you can see my auto invest here, $650 every single month. And then my most recent IPO investment of $2,600. This was to get it just over that $10,000 number, but also keep it a nice round 1,100 shares. Moving on to their Q1 2022 performance update, they say it was continued strong performance despite market volatility. So you often hear the term risk-adjusted returns, which is a tenet of investing, stating that if you invest in high-risk things, you should generally receive higher returns, while lower risk generally produces lower returns. However, they say that they have been successful in producing higher returns with generally lower risk. It's kind of hard to quantify exactly how much risk there is and what your future returns would be, but it's certainly not hard to quantify in retrospect. They say that there are several metrics to include things like beta or past volatility, but the way that they look at it is reducing risks by maximizing future optionality while simultaneously minimizing any actions that could reduce current principal. They mentioned the Buffett rule. First rule of investing is don't lose money, and the second rule is don't forget the first rule. And on this note, they want to emphasize how well they did over the last quarter compared to the rest of the markets. You can see they averaged around 3% in the income fund, 3.5% in balanced, and 3.6% in growth, or somewhere around 3.5% overall. This is split up between dividends and appreciation. Obviously, income will have the most dividends, and growth is going to have the most appreciation. But how exactly does that compare to the rest of the markets? You can see here, public REITs generally have a positive dividend, and the S&P 500 had a little dividend as well. But in terms of appreciation, both of these sectors struggled, down 6% and 5% respectively, compared to the positive returns of Fundrise. They say once again, strong performance in their portfolio, driven by strong fundamentals at the property level, and macroeconomic tailwinds have propelled them over the past 24 months. Of course, there's always some risk in the future. They say there's been several different headwinds, to include a ground war in Europe, which is a sobering reminder that we still live in a world where terrible things can happen. They also mentioned that inflation is going up and that real interest rates are negative, meaning that if you buy bonds, you are still losing money. They also talk about the Fed here, stating that the Fed has moved to a more hawkish stance to try to control inflation, and this could potentially slow down the economy. We have said for quite a while now, don't fight the Fed, and this is certainly not an instance to start now. They mentioned the 1970s where they had pretty high inflation, and it took interest rates to around 20% and 2 separate recessions before things started to normalize. Despite this, they do point to real estate as the best asset to be in times of inflation. They say if you had $100 at the beginning of 1970 and then looked at that same $100 at 1980, it would be worth around $120, not adjusted for inflation, which means you would lose money because inflation got pretty high. So even with that 20% gain, you'd actually lost 40% in buying power. And then you compare this to the markets, which definitely struggled during this period, whereas the home index continued higher at an accelerated rate, as is pretty common with hard assets in an inflationary environment. They say the 1970s did perform well for real estate, and it may not happen exactly the same way, but they are prepared to weather the storm with a strong asset like real estate to include residential and industrial properties, and across geographical locations to include the Sun Belt. Moving over here to my personal returns, you can see I added just over $4,500, and that seems like a lot, but most of that is in the shares of Fundrise that I bought. And then you can see my net returns here, almost $1,400 this quarter, putting my return at 3.5%, just slightly higher than the median because I am in that long-term growth portfolio, which did average around 3.6%. And you can see my returns over the past couple quarters, with Q3 of 2021 being the large outperformer, and then principal invested cash in for this quarter. Certainly, I'm not going to put this much money in every quarter, but I did sell some other investments and move it into Fundrise to buy those shares. Definitely comment down below what you think of Fundrise going forward. Is this platform going to continue to outperform, or will the markets recover? Definitely like and subscribe if you got any value out of this video, and hit the bell so you don't miss out on any future content. Of course, none of this is financial advice. This is all for entertainment purposes. And with that, let's get to the jelly. So unless you've been living under a rock, you know that Will Smith had pretty interesting Oscars this last year. And of course, Andre Antunes turned this into a song as he does with many strange happenings around the world. And I think his version is significantly better than the original. So let's take a look at what that was like.
I know to do what we do, you gotta be able to take abuse. You gotta be able to have people talk crazy about you. In this business, you got to be able to have people disrespecting you. I love you. G.I. Jane 2, can't wait to see it. All right? That was a nice one. Okay. I'm out here. Uh-oh, Richard. Oh, wow. Wow. shit out of me. Will Smith just smacked the shit out of me. Will Smith just smacked the shit out of me. Wow, dude.
Yes.
It was a G.I. Jane jump.
Keep my wife's name out your fucking mouth.
I'm going to, okay? Rock and roll.
Keep my wife's name out your fucking mouth.
I'm going to, okay? Oh, wow. Wow.
Keep my wife's name out your fucking mouth.
I'm going to, okay? Oh, wow. Wow.
Clearly, Will Smith was having a moment, but shout out to Andre Antunes for making a good version, and also shout out to her for being the real MVP and an innocent bystander who certainly got a lot of attention as well. Of course, his actions were not a great move, but it also reminded everybody that the Oscars still exist, so take it for what you will. Definitely like and subscribe before you go, and have a great day.